Thank you for joining us today for How to Restart Your Business in the Wake of COVID-19. I'm Susanna Clough-Clyburn, Senior Director, Parliamentary Affairs at the Canadian Chamber of Commerce. With us today are the Business Development Bank of Canada's Pierre Cléroux, Vice President, Research and Chief Economist, and Peter Lawler, Executive Vice President, BDC Advisory Services. Pierre and his team have authored more than 50 economic studies over the past 10 years on subjects and economic trends relevant to Canadian entrepreneurs, such as labor shortages, international expansion, and how to exceed in the digitally driven world. Before his career at BDC, Pierre was the Assistant Deputy Minister for Economic Development, Innovation, and Export Trade for the Government of Quebec. Peter leads a pan-Canadian team that helps business owners solve their business challenges, from cutting costs, getting leaner, and assessing technology needs to becoming more profitable and more competitive. Before taking on this current role, Peter spent most of his career in financing and credit, working extensively with automotive technology and food and beverage business owners. Welcome, Pierre and Peter. Our objective today is to have you leave this webinar with a sense of the global and economic realities, what recovery will look like, and what businesses should be doing now to prepare for opening and recovery. You'll also have an idea of what financial resources are available to you. Before getting started, I would like to thank the Canadian Business Resilience Network partners that have made this webinar possible. They are the Business Development Bank of Canada, today's presenter, Canada Life, Grant Thornton, Export Development Canada, TELUS, RBC, Desjardins, Deloitte, Air Canada, Facebook, Salesforce Canada, CWB Financial Group, TD Bank, Rogers Communications, Cisco, Sun Life, Morneau Shepell, Sessential Inc., Johnson Insurance, Global Public Affairs, Wellcan, Bell, and the Government of Canada. During the webinar, please send questions you have for Pierre and/or Peter using the Slido app link sent with your confirmation earlier today. The webinar will be in English, mais vous pourriez poser vos questions en français si vous voulez. Now let's get started. Pierre, over to you for an overview of the states of the international and Canadian economies and what recovery will look like.
As we can see from this graph, the U.S. economy is in recession now in 2020. The contraction is going to be about 5%. It's going to go back to the pre-level, the pre-crisis level in 2021. On the right side of the graph, it's our forecast per quarter. Right now, we are in the worst time, where the second quarter, that's where the lockdown in the U.S. took place. As the economy is reopening now, we're going to see more growth in the third quarter, and finally, the economy should accelerate at the end of the year. However, the U.S. economy is going to remain in recession this year. We'll have to wait until the middle of 2021 before we see the economy, the U.S. economy, to go back to the pre-crisis level. So if we go to the next slide, we'll look at the situation in Canada. And I'm starting with the graph, the next slide, please. That is quite positive. I know there's a lot of negative numbers, so I thought I'd make you smile by having this graph to show you the situation of the Canadian economy before the crisis. So these numbers are the latest number we have about the economy before the crisis started in March. So from February 2019 to February 2020, so the last 12 months, the Canadian economy increased by 2.2%, which is quite solid growth. Every sector of the economy except manufacturing had positive growth. So this was quite significant. It's quite positive. Why is it important? Well, it's important because when you start a crisis, the starting point is important to see how the recovery is going to happen. The economic fundamentals in Canada was solid before the crisis. then we expect that the recovery is going to be solid, although I'm going to come back to that point a little bit later. However, as you can see from the next graph, everything changed in March. The Canadian economy dropped by 9%, which is not unique to Canada. We saw that in many other countries around the world. In April, the economy went down a bit further. It's just in May and June that we're going to restart the economy. So this is really having really an impact on businesses, as you can see from the next slide. We tracked down the impact on businesses, and 89% of businesses in Canada had negative impact. So, which is really an unprecedented number. We never saw something similar to that. So the impact on businesses is very severe, but the impact is not only on businesses, it's also on people in Canada. When we look at the next slide, you will see that more than 3 million Canadians lost their jobs. The unemployment rate in Canada went from 5.6% to 13%, which again, if you compare to on the graph to 2008, 2009, this unemployment rate is much worse than it was during the Great Recession. Of course, this recession is different, and we expect that as the Canadian economy is reopening in different parts of the country, people will get, a lot of Canadians are going to go back to work, so the unemployment rate should decline very quickly. However, it's going to take some time before we go back to the 5.6% level just before the crisis. So if we go to the next slide, we can see that the impact on retail, and in Canada, retail sales dropped by 10% in March, as most of the country was under lockdown. Again, just like in the US, every subsector is negative except food and beverage. So during the lockdown, people ate it more at home, and that really had an impact on that industry. But in general, we can see that the impact on the Canadian economy was quite severe. So going to the next slide. So the next part is about actually how the recovery is going to happen. So we look at other countries to see the other countries that have been going through this crisis before us. How did that happen? So we look at China and also look at Europe. The example I'm going to give you today is about China, because China was the first country to be hit by the virus, but also the first country to open its economy. Actually, the lockdown ended in China 6 weeks ago, so that gave us a bit more data about what happened. I understand that China is not exactly Canada. The two economies are different. Nevertheless, I think it's a good example. So what you see is the initial shock on China when they got the virus and they put the economy under a lockdown. Retail sales dropped by 20%, industrial output dropped by 13%, and the unemployment rate hit a record. So as you can see, this is a similar situation that we are having in Canada or that the US economy is experiencing right now. So the initial impact was quite similar. What is interesting is how the Chinese economy recovered. You can see from the next slide that for some sectors had a better recovery than others. That's the case of manufacturing. You can see from the graph, there was a huge drop at the beginning of the lockdown. The manufacturing sector dropped by 13%, but it came back pretty quickly. Actually, now the recovery takes a little bit more time, as many countries around the world are still under a lockdown, so the demand for Chinese products is a bit lower. But nevertheless, some sectors of the economy, manufacturing, construction, are sectors that are coming back. The recovery is a bit faster. However, some other sectors take more time. So the next slide is showing the recovery on the consumer side. And as you can see from the graph, the recovery is a bit slower. After a huge drop, when the economy reopened, consumption started to increase, but not at the same pace as before the crisis. What we realize in China and also in Europe is consumers are cautious. They are health cautious. So even if the shops or shopping malls are open, people are not rushing to the shopping mall because they are afraid of the virus, and also because people got a hit. Many Canadians lost their job. In China, it's the same. Millions of Chinese lost their jobs. So they are also financially cautious. We see exactly the same thing on the next slide, an example from the number of people going to restaurant, like the blue line represent the number of sitting dinners in Germany after the reopened restaurants. And as you can see, we're still way down to the level of the pre-crisis level. Again, people are careful with their health. Also, there's a number of measures in restaurant for protecting people, clients, and employees. So this is limiting the number of seating. So the point I want to make from China and Germany is the recovery is a bit lower for a number of reasons. One of the most important one is consumer remain cautious. So if we go to the next slide, we'll look at what does it mean for Canada. So we look at other countries. We go to the next slide. We did a number of surveys with consumers to understand how they're going to recovery after this. How are they going to shop after the recovery of the economy? And also we look at the different survey, different research with businesses. We have 4 conclusions about how the recovery is going to happen in Canada. The first one is the recovery will be gradual and will be also slower than expected at the beginning. Right now, the graph, this is actually the economic activities. We are right in the circle that you see on the graph. So we are at the bottom. So the economy has been in lockdown for 2 months. We are starting to reopen the economy, but the economy, the recovery is going to be gradual because not all the sectors are going to reopen at the same time. Manufacturing, construction are going to reopen faster, but for example, in every part of the country, restaurants are still closed and tourism is still mostly closed. So the recovery is going to be gradual and is also going to be slow. So our most optimistic forecast is at the top of the graph. We believe that if everything goes well, the Canadian economy is going to go back to the pre-crisis level at the second quarter of 2021. So that means in a year. However, we have also a pessimistic forecast. So let's say some experts believe that we're going to have a second wave of the virus in the fall. So if that happens, that will delay the recovery. And so the recovery will happen only on the third quarter of 2023. So the reality is probably going to be between the two of these optimistic and pessimistic forecasts. But the lesson that I think we have to learn, what we are understanding from all our analysis, is this going to take a bit more time. And the most important reason for that is on the next slide, is Canadian consumer are also going to be cautious. They're going to be cautious for health reasons, because even when stores are going to reopen, many Canadians will make the choice to shop at home or to not going to the shopping mall as often as they used to. Also, 3 million Canadians lost their jobs. So many Canadians lost their revenue, some part of their revenue, over the last 3 months. So they are going to be financially cautious as well. There's many social distancing measures that are going to limit the recovery. That's the case in stores, that's the case in restaurants when they will be open. But that's also the case, for example, in manufacturing, where you have to apply these distancing measures to reopen. Finally, there's a lot of uncertainty. What is different from this recession from other recessions in the past, there's health uncertainty, which is really making people more cautious. If we go to the next slide, you can see that not only consumers are going to be cautious, but businesses are going to be cautious in their investment intention. Every quarter, we keep track of investment intention in Canada. As you can see from the graph, the situation has changed drastically. Just in January, the investment intention of businesses in Canada were quite positive. There were more businesses saying they will invest more in 2020. Of course, the situation totally changed in April, and this number is quite negative now. So it's going to take some time before companies have the capacity and also the confidence to reinvest in their company. And that's another reason to explain why the recovery is going to be a bit slower than expected. The second conclusion about the recovery is on the next slide, and it's the fact that e-commerce is really exploding. E-commerce in Canada increased by 40% in March, and it's going to continue to increase strongly in April. As you can see from these numbers, for example, e-commerce in the food and restaurant sector increased by almost 200%. The increase are also significant in clothing and every other store. What is most important is our research with consumers show that many Canadians are going to shop online after this crisis. 48% of Canadians bought for the first time something online during the crisis. Imagine, 48% of Canadians bought for the first time something online during the crisis. 80% of them say that they are going to continue to do so because they realize the benefit of buying online, and also because of health reasons. They want to be cautious, so they prefer the safety of shopping from their computer than going to a shopping mall. So this is very important because many small business in Canada doesn't have a website or they don't sell online. So as the market is changing drastically, it would be very important for Canadian businesses to adapt to that. The third conclusion is on the next slide, and it shows that the supply chain in Canada was really disrupted for many Canadian businesses. Actually, 60% of businesses had difficulties to get the product or the services they needed during the crisis. So what we are seeing now is supply chains are going to be more diversified. Large businesses in Canada said they're going to diversify and regionalize their supply chain, which is good for small and mid-sized firms in Canada. Finally, the last factor or the last conclusion from this recovery is on the next slide. And as you can see, there's going to be a lot of opportunities for acquisition. Unfortunately, the shock that we're having is very severe, and some businesses are not going to survive this crisis. So that means that for other businesses, it's an opportunity for acquisition and consolidation. So finally, if we go to the final slide, I'm going to conclude on that. And the Canadian economy, I'm sorry, so this, I just want to recall this four conclusions about the recovery in Canada. The first one, the recovery is going to be gradual and a bit slower than what we expected at the beginning. So we'll have to be patient. We expect the full recovery is going to be somewhere at the end of 2021. Second, e-commerce really exploded during the crisis, and it's here to stay. Third, supply chains are going to be more diversified, so there's going to be opportunities for Canadian business to play a better part in the supply chain of large businesses. Finally, there's going to be opportunities for acquisition and consolidation, as this crisis has been very severe, and unfortunately, some businesses are not going to go through that. So finally, my final slide is the Canadian recovery is well on the way, but the recovery is going to be a bit slower than we expected at the beginning for two reasons. First, the economic shock was more severe than expected, so it's going to take a bit more time to recover from it. Also, because this recession is different, there's a lot of uncertainty around COVID-19, which will make this recovery a little bit slower than what we thought at the beginning. So I'm going to stop here and give you, Susan, I'll get back to you.
Thanks very much, Pierre. And now, Peter, we'll hand it over to you to tell us about what businesses should be doing now to prepare for reopening and recovery, as well as some of the resources, including financing, available to them.
Good afternoon, everyone. I want to speak today about how small and medium-sized businesses can start planning for the recovery, and then also to talk about some of the financing programs, and resources that are available for business owners. If we can advance the slides. Next slide, please. So just very quickly, I'll talk about BDC. For those of you who don't know BDC, we are Canada's development bank and the only bank in Canada devoted exclusively to entrepreneurs. We complement the role that is played by private sector financial institutions, and our shareholder is the Government of Canada. We've been supporting entrepreneurs for over 75 years, providing financing, providing capital as Canada's largest venture capital firm. and also providing advisory services, which is what I lead. In times of crisis like this, one of the important roles of BDC is to provide credit to businesses to help them to weather the storm and through this difficulty. And in this crisis, the government, our shareholder, has given us the capacity to expand our current offering to meet the challenges that are ahead. Well, this challenge is what is different maybe than in the past. Made it really important for us to work hand in hand with private sector financial institutions and also with other federal partners across the government in order to increase our speed and reach as it relates to this. And as I say, I'll talk a little bit about some of the financing programs a little later in my presentation. If we go to the next slide, one of the things we've seen over the last 3 months or so, 2.5 months, is the disruption in business operations has really caused many companies to completely suspend operations, and many that are only operating at partial capacity. You know, managing cash has been an important part, and has been an important part of key anxiety for companies to kind of weather the storm. And really looking at this in conjunction with all the health and safety initiatives that businesses need to put in place has put an awful lot of pressure on SMEs and business owners, and we see that certainly in our own work. Going from the early stages of the crisis in terms of kind of a panic mode that set in, to really being able to kind of manage the crisis. Now what we're seeing in our work with businesses is people are really starting to plan for the recovery. And, you know, because many are really starting now to think about or actually doing restarting operations and adapting we've called the new normal. And so if we want to focus a little bit on the recovery today, you know, one of the questions that we get is, so where do we start? Go to the next slide. You know, one of the things that is obviously key in this, and as Pierre had mentioned, that is causing some anxiety and uncertainty, is around health and safety. You know, providing a safe workplace is foundational to be able to serve your customers effectively. And this should be the #1 priority for all businesses, and I believe the first step. You know, and at this point, we've all seen the tape on the floor and the plexiglass at the cashier at the grocery store. And it's important to recognize that health and safety obviously goes beyond these efforts. And it's going to really affect every part of your business. So for example, now how will you ensure social distancing in common spaces in your business, in your workplace? How do you do it as people arrive for work? You know, how do you ensure that the fridge and the microwave are sanitized between uses? How do you deal with suspected or confirmed cases of COVID within the workplace? And then how will you communicate all of this to your employees and potentially to your customers? You know, all of this needs to be figured out prior to restarting your operations. And we would certainly encourage everyone to, you know, regularly visit your provincial public health agency website to review specific industry recommendations or review what is in place for your region. Next slide. So once we've done this, and we look at kind of where businesses are today, I think it's fair to say that, you know, all businesses are going to need to look at how they adapt their business model. The business model that we had, you know, before March may not work anymore in the current context. And I'll give you an example from my team at BDC in terms of BDC advisory services. So I lead a team of about 200 across the country. And our business model would be, we would go and meet entrepreneurs in their place of business. We would visit their plant, look at their operations, and provide advice on a variety of business challenges that they would face. And with distancing measures in place, obviously we have not been able to do that for the last few months. So we had to quickly adapt all of our solutions to be able to deliver them virtually to our customer base. So it was really very quickly having to change our model based upon the current situation. So when we look at kind of this 3-step approach, and as we talk about reinvention of your business model, we find this as a very useful way to kind of think about how you would do that. #1, in terms of really exploring, so what are the potential options that you would need to look at? And there is this crisis has shown that there's really no kind of recipe to fall back on. A lot of it would depend upon your industry, your stage of growth, and what it is that you're doing. But to be able to really look and say, what are potential options need to consider to change our business model. Secondly is around experimentation. So we believe that before moving to a permanent change in any business model, you need to test some prototypes with real clients and markets. And testing business model ideas helps to eliminate uncertainty and de-risk any potential changes, and it can be done relatively quickly and inexpensively. And then so if you explore and experiment, the next is, if you find something that works, is to scale it as quickly as possible. Otherwise, it's the fail fast approach, and then you try something different. And once you know what works and what is scalable, then you can build a business model that's really focusing around innovation and flexibility as you continue to move forward in your business. If we look at the next slide, as Pierre mentioned in his comments, since the beginning of the crisis, Pierre's team surveying business owners and surveying them every 2 weeks. And as you saw in Pierre's part of the presentation, the majority of businesses have been affected by this COVID situation, and there's really no surprise here. But we also asked business owners, how the actual crisis has redefined their priorities. And you can see here that almost 60% that they need to or want to broaden their product and service offering. They also want to reduce expenses. And finally, and it comes as no surprise, and Pierre talked about it, that they want to be able to offer their products and services online. And the piece around expansion is a bit of a given almost, given the current situation that all businesses are looking to find ways to make their operations and processes as efficient as possible to save money and reduce expenses. But what I wanted to do is to give you a real life example of a business who's done the other two things, who's broadened their offering and moved their business online. And on the next slide, I'll introduce you to a business in Quebec called Hector Lerivet. So Hector Lerivet is a Quebec distributor of food for hotels and restaurants. And less than 24 hours after the Quebec government ordered all non-essential businesses to shut down, Hector Lerivet's sales plummeted by 90%. With very little time to act, the company leadership put together a crisis management team, brainstorm ideas to salvage the business. And the team put in place a 3-part action plan that changed their business model. First, they donated their excess inventory to local food banks. Second, they used their drivers and trucks as a third-party logistics supplier. And then lastly, they began selling directly to consumers. But the transformation of the business did not stop there. Within a week, the company launched an e-commerce platform where the general public could order produce online and safely pick up from their warehouse. Soon added delivery in response to a surge in customer demand, which saved a huge number of jobs in the business and allowing them to keep going during the crisis. They changed their business model and quickly pivoted to be able to online and also to be able to sell directly to consumers, so broadening their product offering, which I think is a really great story. On the next slide, I want to briefly focus, and Pierre talked about the importance of this, and I think the surveying shows this as well, and that one of the trends that I believe will be here to stay is that it's extremely important for businesses that if you're not online now, it's going to be really tough in the future, and you need to gain an online presence. So if you're a business owner, you need to really, how do you establish, first off, if you're not there, how do you establish a presence? And if you're there, how do you enhance your online strategy? And there's really 3 main considerations when we look at online sales strategy, which my team assists companies to do. First, you really need to understand how an online sales strategy works in your industry. Second, you need to adapt your business to online sales by building new capabilities. So it may be you need different capabilities, you market your products, different capabilities from a logistics perspective. You'll need to look at that and what it is that you would need to do. And then thirdly, really needing to define your goals and actions that you and your team will take to really effective online plan. So really to conclude the first part of my presentation, before I talk about some of the financing programs, think about revamping your business model. You need to ask yourself, really, what do we need to do differently coming out of this crisis? How can I rebuild my sales? What are my most profitable product lines, and how do I need to really understand your state what consumers are going to want? And then obviously taking a look at your current business model and say how it can evolve to adapt to the new reality. On the next slide, if we advance, and if we go to the next slide, I want to talk about some of the financing programs and resources that are available for SMEs. And I think one of the simple ways to think about the programs that are out there is really by the size of your business. And most of the programs that are available are offered through private sector financial institutions, either your bank or your credit union. So for smaller businesses with smaller capital needs, you have the Canada Emergency Business Account, or CEBA, are interest-free $40,000 loans that are provided by commercial banks and credit unions and guaranteed by the federal government. Repaying the balance prior to December 31st, 2022 will result in loan forgiveness of 25% or up to $10,000. This is not a program that's administered by BDC or that BDC is involved in. It's offered through private sector lenders. To date, over 600,000 small businesses have accessed the CEBA program. So it's obviously shown that there's a great need for working capital for companies. On the next slide, in terms of BDC and our own response to this, is we're providing working capital loans up to $2 million for businesses with very flexible terms and conditions, including postponement of capital. And these are available through BDC, so either through your local BDC office in terms of contacting them, or all of the information is available on our website at bdc.ca. So and we've seen a huge increase in demand for working capital financing. Just to give you a sense, year over year, the demand has increased by over fivefold in terms of the number of loans that we've done in that period. On the next slide, talk a little bit about the Business Credit Availability Program, or BCAP, which is a number of initiatives that have been put in place by BDC and EDC through private sector lenders to support companies, and using the private sector banks as a channel to be able to get money out faster to companies. So from a BDC perspective, on our co-lending loan for small, medium-sized business, there's up to $12.5 million to get a boost in liquidity to cover business expenses. So these are for working capital needs. And this is backed by BDC and 20% provided by your primary lender. And your primary lender is the channel to talk to for these programs. Also, Export Development Canada, or EDC, a loan guarantee for small and medium-sized enterprises for new operating loans for up to $6.25 million. I'll talk briefly about a new program that has been launched, in the process of being launched for larger businesses whose credit needs go above $12.5 million. So for clients or companies that need between $12.5 and $60 million, a new program recently launched is called the Mid-Market Financing Program, where BDC will provide subordinated loans from $12.5 to $60 million for qualifying businesses. And we expect that these are for companies that would have revenue in excess of $100 million. Interested in this is still being rolled out, working with private sector financial institutions. If you're interested, you can go to bdc.ca coronavirus, and there's a link where you can sign up to get regular updates. This program gets rolled out. So on the next slide, just to reiterate again on how to access these programs. If you're an existing client of BDC, you can contact your BDC account manager, who will be able to direct you in the right way on how to access all of this. If you're not a BDC client, your primary financial institution should have all of the information in order to be able to offer these solutions to you. In terms of the next slide, here's just a list of government programs that are available And on our website, which you can see on the bottom, it's a really comprehensive list that is there. The next slide, we know one of the things that for businesses, it's more than money to get through this crisis. We believe that advice is absolutely critical. So in terms of BDC, we developed 3 new solutions to help in terms of how do you increase your online sales, maintain critical activities. So how do you have the right financial and operational plan to move forward? And then thirdly, a solution to help businesses to reduce their health risk and to mitigate the challenges of operating a business safely in this environment. And BDC Advisory Services has solutions to help with this. As well, on the next slide, there's a what we call the Entrepreneurs Hub, .ca, which is really great information on crisis management, how to manage your cash flow, risks, operations, and customer engagement. So it's a hub with tools and tips to help you map out what are the next steps that you need to take, how do you identify opportunities going forward, and how do you best position yourself for the future. Lastly, on the next slide, in terms of the kind of takeaways that hopefully you'll get from today. Number one, that health and safety is a key risk to manage and to be able to open your business safely. Aligning your operational and financial plans and to ensure that, you're looking at your business model to take advantage of these. And then thirdly, to prepare, as Pierre mentioned, for a long gradual recovery and to take advantage of these new trends and opportunities that are out there, particularly in terms of establishing an online presence. So I want to thank you for that, and certainly we'll be available for some questions. Thank you.
Thanks a lot, Peter. Before we go over to the questions that are starting to come through from those joining us today, I wanted to ask you about your advice to businesses that are being told by their financial institutions that they don't have information or aren't participating in or the other, one or more of the COVID-19 support program.
Maybe I can take that. So it is possible that every bank and every financial institution, credit union in the country is maybe in a different place in terms of how they've rolled some of these out. The vast majority of all the large banks in Canada are offering this the co-lending program. So if you're not getting the answer that you would want from your institution, I would suggest having a discussion with another financial institution is probably the best approach.
Okay, thanks very much. Now we'll go over to the questions that have come through on Slido. And Pierre, one of the first ones that came in was during the course of your presentation, and it's with regard to the accommodation and hospitality industry. So non-food, retail, or beverage. I think this questioner was talking about hotels, golf courses, campgrounds, that kind of thing. Where are they in the scheme of things in terms of impact and potential for recovery?
Well, we do analysis by sector, and unfortunately, that specific sector is going to be one of the sectors that is going to have to wait the longest to recovery. Like we all know, our border to the U.S. is still closed. Tourism from outside the country is an important factor in accommodation in Canada, so we won't have access to that for many months. Probably the border with the U.S. is going to be reopened at the end of June, but the flow of tourists is not going to be the same for many months, probably not before the summer 2021. So there's going to be a campaign this summer to invite Canadians to stay at home, to stay in Canada for their vacation, their holiday, and I think many Canadians are going to do that. But there's no doubt that this sector is going to take longer than most sectors in Canada to recover.
Yeah, and that's I would agree with you on that one, Pierre, and I think most people would. Peter, this one I think is for you. What's the most frequently asked piece of advice you and your advisory services team are asked to give?
Yeah, I would say that when we're looking at Number one, a lot around how do I effectively manage my cash flow in this in a challenging time, and as well as now as we're starting to see things starting to restart, is how do I really do this safely? I mean, this is something that most businesses have never been through something like this, and trying to figure out a way to operate safely for their employees, for their customers, and doing it in a way that makes sense for their business is the areas that we really are seeing lots of questions that are coming up to our team around
Thanks, Peter. So I'm not sure which of you to direct this to. So our next question is about the nervousness that many businesses are feeling about the amount of debt that they've taken on during this crisis. Would either of you have any advice on how to manage heavy debt loads as we start to move into as what you characterized, Pierre, as a slow and gradual recovery?
Well, I can start on that. I think you're correct. I think many businesses have had to take on additional debt in order to be able to weather the storm. I think there's a couple of things. Number one is looking at the cost structure of your business to ensure that you're as efficient as possible in terms of your own operations and processes. So I think that will be a critical one. I think the next one is also making sure you keep good dialogue with your lenders. I think that given that this is an unprecedented time, having that good open communication, I think that people are exceedingly, everybody wants to see businesses kind of ride through this. So having those open levels of communication. And then thirdly, I would say is, really trying to find innovative ways to grow sales as quickly as possible. I think, revenue growth will be a key in a slow recovery. So I think those businesses that are going to be successful, those ones that are going to figure out, change their model to grow more quickly they would if they were just maintaining their existing operations.
Is there one, and again, I'll let either Pierre or Peter respond to this next question. Is there one thing that you believe entrepreneurs should be thinking about, but they're not at this point?
I think what studies are showing so far is, and I talk about it, but is the online business. The online business is really taking some really exploding in Canada, and many small and mid-sized firms are not really present online. Only 50% of businesses have a website. It's about 20-25% of businesses who have transaction online. So in this context where consumers are buying more online than ever before, and the research we do with consumers is showing that this is not going to go away. It's not going to go back to the previous situation. It's going to accelerate. I think that's something that is very important for business to rethink their position online, their product they're selling, their services, even the one who are selling online. They might improve the way they're doing it, make it more easier for clients to look at their products online or to have a transaction online. So I think that's something that will be very important in the next few months for many businesses in Canada.
Thanks, Pierre. And I think all of us would agree. It's one thing ordering online. If we could just get the darn stuff delivered more quickly, that would be good too. So on to the next, and there's another business opportunity that if you haven't been thinking about going into the logistics and transport business, you might want to do that. Clearly, we don't have enough in this country right now. Bankruptcies. The rate of bankruptcies at, below, or above what we expected it would be at this point in time. I'm not sure. Pierre, is that one that you
Well, the latest data we have is for March, which is right the beginning, really, of the crisis. And the level is the same as it was a year ago. So we expect these numbers are going to increase. But having said that, in the last recession, the level of bankruptcy in Canada didn't increase much. What we see more is people who decide just to close their business. People who have been, they realized during the crisis that the shock was too hard, or this business model is not going to be sustainable after the crisis. So you're going to see a lot of business who just close, not necessarily they're going bankrupt, but a lot of entrepreneurs will decide that it's time to close their business. So there's going to be opportunities for other businesses who have a different business model for acquisition and to scale up, maybe. That's what we see after each recession, and I think this is going to be the case this time.
The next question is about interest rates, and that the loan support programs that have been announced by the federal government are low interest if paid back in a short period of time, some forgivable if paid back by the end of 2021. Some members are saying that BDC stayed with the higher interest rates. Comment?
I'll leave this one to Pierre.
So, in terms of many of most of the loans that we have put into the market have been at reduced interest rates that we've compared to what our normal interest rate pricing, recognizing the challenge that the current situation is bringing. And as we move forward, noticing that or recognizing the fact that we are in an extremely low interest rate environment, and I think Pierre would agree that I think that this low interest rate environment is going to be here for some period of time to support the recovery. Pierre is much more of an expert in that than I am. And then the other programs in terms of the banks, most of the programs, most of the response that we are involved in, or the big piece of the response is through the private sector financial institutions and providing them the liquidity to lend to businesses.
Yeah, if I may add, I totally agree with Peter. The interest rates are going to stay low for a while. Governments like central banks, they use interest rate to stimulate the economy. That's exactly what happened this time. They reduced interest rate to almost zero in Canada, same thing in the US. So before they want to increase interest rate again, it's going to take a long time. It's going to take that the economy go back to the pre-crisis level, and it's strong enough to stimulate some inflation or some price increase. So I don't believe interest rates are going to increase for the next 2 years, and after that they might increase very slowly. So we are going to be in a business environment with low interest rate for quite a while.
Thanks very much, Pierre. I think this one is one directed to you. How will the recovery in the U.S. and the prolonged border closure, I'm assuming that's Canada-U.S. border closure, affect our economic recovery?
Well, it does have a big impact because 75% of everything we export is going to the U.S. So the U.S. is the number one economy in the world, but it's also our number one trade partner by far. So what's going on in the U.S. really have an impact here in Canada. But the news are not that bad. I mean, the U.S. were under a lockdown and was really affected by COVID-19, but the economy is reopening now. And the fundamentals of the U.S. economy was strong before the crisis. Unemployment rate at 3.5%, the lowest in 50 years. The debt level of consumer, it was really reasonable, even after 10 years of growth. So consumers are in a good position to restart the economy in the U.S. So I would say, and the fact that the border was closed, it does have a big impact on tourism. But for the rest of the economy, the movement of products was still happening. So I think the U.S. economy is going to recover actually faster than the Canadian economy because the oil sector is not as important in the U.S. than in Canada. And I think Canada is going to benefit from that.
Thanks. Now, I'm going to be doing a little bit of interpretation of the next question because I think what this person is saying that if you go to your financial institution and you're rejected for one of the COVID-19 support liquidity programs, could it be because the eligibility criteria differ from financial institution to financial institution? Peter, is that one you could answer?
I can certainly answer that. So I think in terms of every financial institution is slightly different in terms of their own risk appetite, in terms of what they're prepared to do. All of the programs that have been rolled out are rolled out for financially viable businesses prior to COVID, happening. So if someone has made an application to their bank and it is rejected, they should have a long discussion as to the reasons why that is the case, and then look for other alternatives that are out there in terms of perhaps through BDC or EDC directly, that there may be an opportunity to help.
Okay, thanks. And actually, this last question, I think, flows from that. So back at the beginning of the Q&A, Peter, you said that if someone is, not getting either we're not participating or we don't know anything about the liquidity programs under COVID-19, you suggested that they might want to go to a financial institution. How realistic is it to assume that a financial institution is going to want to take on a new business customer at this time?
Yeah, it's a very good question. Whether they will or not, I think there's still clients that are, companies that are moving between various financial institutions. I guess the reason, and if the bank isn't willing to do something with the company, the important thing is to understand really the why, and then the next question is what would be required to be able to do something with them. I think that most businesses have taken advantage of deferral programs that the banks have offered in terms of deferment of capital. And then I think the important, a very important piece is to be able to understand what your liquidity and cash flow requirement will be when you look over the next 12 months, and to be able to communicate those and to understand the solid plan around that, hopefully to be able to go back to your institution so they can do something.
Thanks a lot, Peter. And both Pierre and Peter, I want to thank you very much for your time today. I think the message that you've conveyed is extremely important. We're still in the midst of this crisis, but it is important to start planning ahead for reopening is happening at various stages throughout the country, and we are going to recover from this, and it's important that we all be prepared to do so. So thank you so much, and thank you to BDC for helping us to make this webinar possible. Everybody who is participating today will be getting an email in a couple of days with the link to the recording of this webinar. And I thank you all for taking the time to join us this afternoon, and I hope that you all stay well. Thank you very much, everybody. Bye-bye.
Thank you.